ARM notes, ARM notes. Some people want to murder if you use the word ARM note, they want to hang up the phone. But let me tell you, truly, ARM notes for about the last 30 years have been lower than fixed rate notes, because 30-year fixed rate notes are the highest instrument on the market. And so you're going to buy a 30-year instrument you probably won't use more than 5 or 6 years, because you'll either sell the house,
right,
you'll build on it, you'll sell it down, you'll move, you'll do a cash out equity, you'll refinance, you'll do something. The average 30-year note saves on the books 5.4 years in the United States. So why would you pay for something for 30 years you're not going to use but 5? So there's ARM notes that are like a 5, 10, 3-year ARM, 5-year ARM, and what a 3, 5, 7, or 10-year ARM note is, it's a 30-year amortization, normally speaking, and the rate is locked for the first 5 to 7 to 10 years at a much lower rate than the 30-year rate. So ARM notes are not altogether bad. Let me just say this. I've purchased in the last 25 years probably 5, 6 homes. I've never done anything but an ARM note. Never in my lifetime a 5, 7-year ARM note, nor would I. Because I can tell you, it's the only mortgage, it's the only mortgage the lenders tell you what they're going to make up front. And I can tell you this, I bet you, I'm not exaggerating a bit, $1 billion worth of loans in Dallas, Texas,
wow,
that are under 3% and have been under 3% for the last 7, 8 years.
So let's talk about what happens at the end of that ARM. So you're at 3%, okay, and then so
all right, let's say
something happens and I'm not going to sell it.
Let's say somebody calls me on a jumbo loan, $1 million loan, they're going to put 20% down. A 30-year jumbo today is about 4.25% to 4.5%, depending again on credit score, loan to value, etc. Where a 10-1 ARM, which is locked for 10 years, in other words, the rate can't vary for 10 years, is priced at 3.5 today. So there's a 3/4 of a point difference in the rate. And what happens at the end of 10 years? So that rate can't change for 10 years. And most people feel pretty confident about that. At the end of 10 years, it re-amortizes, and re-amortizes for a 20-year period. It doesn't re-amortize for a 30-year period, and it rolls over where the current index and margin are. And the current index and margins are all less, every single case across the board are all less than fixed rate notes today. So ARM notes don't scare me, and a consumer that says, well, my aunt got one back in 1974 and got screwed. Well, in 1974, 75, 76, fixed rate notes were 16, 17%.
Yeah.
ARM notes were 12%. So people got that memory in their mind. It's like a 2-minute warning in football. It's a big lie. You can ask me, in my opinion, I can go to 7-Eleven, get a hot dog and a cup, and come back and the game's still on with a 2-minute warning.
Yeah, it's about 15, 20 minutes.
Yeah, it really is. So again, as long as you understand these notes and instruments, because a lot of people think ARM notes, quite frankly, the rate can go up tomorrow, it can go up the next day. They're not. They're locked for certain periods of time.
Right.
And the longer you lock them out, the higher the rate's going to be. For example, you can get a 5-1 ARM right now on a conforming for probably 2.5%, where you're going to pay a little under 4% for a 30-year fix. So if you're going to be transferred in and out, let's say you're only going to be here for 3 or 4 years, or you're moving laterally upward, or
yeah, it makes perfect sense.
You got some kids coming along, you're going to buy a bigger house or get in a better area, or anything. So you may opt to save 1.5 points on a mortgage loan and do a 30-year note that's locked for 5 years and get a point better or 1.5 better in rate.
And you're building equity quicker.
Well, if you pay the same payment,
Yeah.
that you know.
Make the same payment.
Yeah.
Yeah. That's a Mike's Mortgage Minute here at Reliance Mortgage.